Victor, we highlighted earlier this week how many have been saying that any gains this market sees over the short term are still simply not sustainable when issues of liquidity and then, of course, as Leon has been saying, confidence persists as well. But the Fed does intend on pumping $2 billion into the system. It's expected to increase the liquidity position in the country and decrease economic fallout. The more optimistic says that this translates to more spending and investment in Nigeria moving forward. Do you share that sentiment?
That is largely correct. What we've seen has been, following on the actions of the CBN between August and October, we have seen a near total freeze, basically in credit to the sector, private sector. What the government is trying to do essentially is to ensure that there is liquidity within the economy. There has been a slowdown of business growth. We've seen in some cases losses, job losses, and basically a slowdown in aggregate demand within the economy. The government of Yar'Adua is essentially trying to pump liquidity into the system to see to some measure of growth overall.
Well, Leon, let's look at the other side of the coin then. I mean, we've got reports being released questioning the impact, saying that the $2 billion stimulus would be inadequate and really just a matter of being too late to reduce any hardship in the economy. And it's simply going to make up for the deficits in the year, for the year 2009's expenditure projections. So what's the merit in that argument?
Well, you've probably got to see it in the context that it's the economy of, I don't know, $200 billion, roughly, probably slightly bigger than that. So $2 billion equals 1%, that's the relative magnitude that we're talking about. But at the same time, I think one probably needs to look at where exactly is this money being applied. Right? And now, because about half of the money is going into the banking sector, I think that is a pretty decent application of money because that is addressing what I believe is the root cause of the problems in the Nigerian economy at the moment. Yes, of course, we've got a global slowdown that's impacted on oil exports, those things, but the hub of any economy has to be, the oil that keeps things going is the financial sector and how healthy that is. So putting $1 billion of that into the financial sector, I think, is probably worth a lot more than $1 billion in, some form of agricultural product. So yes, it is a relatively small amount of money. But it's not the only money that they've put into the economy. They have made withdrawals out of the excess crude account previously, so this is a sequence of events. But I think in the long run, no economy, and Nigeria, given its dependence on US demand for oil products, it's going to suffer from the global slowdown, and that's just a simple fact for any country around the world.
Well, Victor, Leon's highlighted the importance of the banking sector, and I mean, we've seen reports just this week highlight how the banks are possibly going to be rationalizing their workforces moving forward. We're looking at a possible 30 to 40% reduction in those workforces. Are you cautious around the banks still, given that this playing field is just so uncertain despite the audit process now being complete?
Well, the banking sector remains primarily the key driver on the Nigerian Stock Exchange because it accounts for a significant chunk of the market share, of market capitalization, in a sense. It has been the key intermediary within the economy, translating gains within the oil sector into the real sector. However, following on the challenges and the issues surrounding balance sheets that have essentially not been fairly accurate, and the anticipated reduction in workforce, we are looking essentially to see what the follow-on impact would be on the economy. One of the things we'd expect to see, of course, going by the unified common year end expected by December, is significant slowdown or possibly a cutback in the workforce, because essentially a lot of the banks have been significant contributors to employment generation in the economy. That is going to have a significant impact on society. However, we are cautiously optimistic that indeed the steps that have been taken recently are in the right direction. We'd expect that once indeed we have all the issues surrounding toxic assets sorted out, possibly with the creation of the asset management company by the CBN, in a sense, to take over this bad loans, would expect a lot of confidence to return to the system, and that we're beginning to see already. Once they can sort out the issues surrounding this assets, we'd expect to see some measure of growth maybe not as accelerated as we've seen in the 2 years up until last year, but however, we do expect to see some growth in that sector. And well, primarily their role as the key driver of the economy is still pretty much intact, or as the key intermediary per se. The oil and gas sector still remains primarily the key driver of the Nigerian economy. Thankfully, the measures embarked upon by the president with respect to the amnesty has had some pronounced measure of success. What remains to be seen is how sustainable this program will be, and in effect the government carrying on this, the confidence gained from this in recent measures, and ensuring that the restiveness of the youth and the larger population within the Delta is addressed.